Welcome back to the channel. I hope all of you are having a great day. So today's video, the main theme that we're going to talk about is that even if the floor is in, which I believe we could go a little bit lower, the amount of time that we're going to spend down here is going to be a lot longer than you actually want it to. So we're going to cover that in terms of the on-chain data of Bitcoin. We're going to look at the past history of it, look at what's happening today, and even though the past doesn't repeat itself, it often rhymes. So we're going to be looking into a lot of those charts, and then obviously we're going to look into Bitcoin's chart to see what could possibly happen. Now, I do have timestamps down below for you guys for your convenience, and on top of that, we do have a weekly newsletter that we're putting out where we have similar content as to these videos, but we take a little bit more of a deep dive on a weekly basis. So go check that out in the description down below. So like I said earlier, the main talking point of this entire video is going to be talking about the floor of Bitcoin in the entire market. Even if we've reached the bottom, it's going to be a lot longer for us to actually get out of this floor, right? Leave this place that we're in. And there's a lot of indicators showing us that this is just going to be a prolonged floor or bear market that we're currently in. Now, the first thing I want to show you is that there's a possibility of what Jamie Dimon is saying is that we can still go another fifth of the S&P's value in terms of losses. That means that the S&P would be lower than 39% of its value in the January high. So he, the CEO of Chase or JP Morgan, is saying that yes, we are still going to go lower. And while even though, a lot of politics, like I know Joe Biden just came out recently saying that we should not worry about the recession, a lot of that comes from, the midterms coming up and politics, and we're not going to get into that stuff. But basically, the best way to think of it, the market is like an overly enthusiastic teenager. I mean, when you really think about it, we were just in a decade of hyper growth and constant gains in the stock market, and basically every single market, real estate, crypto, stocks, equities, everything went up for the past decade. And now everyone is still in this crazy world of we're still going to break out and create another all-time high here very soon. The bear market can't last that long. But when you look at the past, bear markets typically last a very, very long time, and people just don't want to accept that fact. Now, before we actually get into the on-chain data of Bitcoin and look into why this bear market floor might be in or why we could go lower, the one probability most likely is that even if the floor is in or it's not, it's going to last at these levels for a very long time. But one thing that is very interesting is that when you look at treasury markets and compete them in terms of volatility versus Bitcoin, you can see that treasury markets are more volatile than Bitcoin actually is. Now, this is an interesting point. Obviously, we know this because of all of the crazy credit debt and sovereign debt crisis thing going on. Obviously, all of the crazy bond yields are skyrocketing. But one thing that I want to notice is that a lot of this volatility is being taken away from Bitcoin, and that while Bitcoin has been a little stagnant at this floor, eventually once this volatility leaves the treasury markets, the volatility doesn't just go away. Typically, it is transferred into another market, and we could see that volatility enter back into crypto and back into stocks, maybe pushing it a little bit further down. But enough of the fluff, enough of all of that stuff. Let's get into the data. Let's talk about what's going on with Bitcoin's on-chain analytics, and let's see if we can figure out what's going on in the markets. So the first thing is the relative address supply distribution. Basically, this is looking at addresses that hold Bitcoin that have at least 100 to greater than 100,000 Bitcoin. So these are your whales, your institutional investors, and your wealthy people. Now you can see from the top, they held a little bit over of 70% of the supply of Bitcoin. Since the tops back in April and November, obviously they have been selling off to short-term holders and people that are just getting into the markets. So their supply has dropped from over 70% to getting closer to 65-60%, which is telling you the long-term holders are capitulating, and they have been since November, and giving their bag off and basically taking those profits, which we obviously know is typically what happens. Now, another very interesting thing is the realized price of these whales. Now, the realized price is a very strong psychological barrier for a lot of these whales because typically smart investors, long-term investors, and these institutional investors do not like to see their portfolios in red, and they will do a lot to make sure that they stay above water. And typically their realized value right now is around $15,500. This is a very important level because If we do get to these levels and these price points, there's a strong chance that we get a massive rejection in terms of a bullish support level, because there's going to be a lot of buy pressure in order to make sure that these portfolios do not go under. In terms of short holders and retail holders, I mean, people are fine with having 60% drawdowns all the way from the tops. But when you're talking about these institutional investors who are holding millions and even billions of dollars, they're going to do a lot in order to make sure that they don't go anywhere below their cost or realized price. So that is a very important zone to remember, is 15.7 thousand in terms of Bitcoin's price. Now, when we're talking about bear markets and we're talking about floors, right? When we look at the 2014-15 bear market right around here, you could see that the floor or percentage of supply in profit was around 40 to 41%, meaning that more than half of the Bitcoin holders were in a loss. When you look at the 2018-19 bear market, same story. We're in there for around 40 to 42%. Even the COVID crash, which was literally just a couple of months, was at 47. When we're looking at the most recent bear market, we haven't even dipped below the 50% level, which tells us that we still do have a little bit lower to go if we're comparing this percent supply and profit to past bear markets, even including the COVID crash. So maybe the floor is in, but according to this model, we could still drop at least 10% more of people in losses, which could result in at least, a couple thousand in Bitcoin's price. Now, a little bit more of an interesting model is that let's take a look at the same exact chart, but people who have been inactive in the last 7 years. So these are addresses. These are the amount of Bitcoin that have not moved in the last 7 years, which is crazy to think about. And when you take a time frame that long in terms of Bitcoin, these are now considered the lost or inactive Bitcoin. And there's around 3.7 million Bitcoin, and around 10 million of those Bitcoin are supply and profit. So it's very interesting to account for, the Bitcoin that could possibly be lost, because we know that is a factor. And then what is inactive? Who are people who have held for over 7 years and haven't moved their Bitcoin yet? Are they just not going to do it? Have they lost their Bitcoin? Are they just waiting for the right time? So it's going to be very interesting to see, will these ever move? Or, are these Bitcoin just lost forever? And that diminishes the supply, which again, in the future will help the price. But for now, it's an interesting thing to look at. Now, just a couple of charts ago, we talked about how the percentage in terms of profit is still at 50%, and it could drop to about 10% more, which means a price decline. Now let's talk about the duration. If we look at the 2014-15 bear market, it lasted around 301 days when the net unrealized profit and loss fell below that equilibrium of 0. Basically, what this means is that there are more people in a loss than there are in a profit. And it's very easy to tell because usually in bear markets, more people are losing money. But the duration of time also matters, because in the 2014-15 bear market, it lasted for 300 days. And then when you come over to the 2018-19 bear market, around 134 days, but that was literally from this drop. You remember that $6,000 floor for Bitcoin that literally did not break for months and months and months. And then we had that massive capitulation. Well, that lasted around 134 days. If we go to what Bitcoin's price is, we've only had little increments of being below that 0 equilibrium price. So, and this is not, all at once, whereas you see these bear markets, this was all at once. And then this bear market all at once. Well, what we had was a little dip below, a market rally, and then we had another dip below again. And this has only been 88 days if you put both of these together. So that tells us that even if we go to the 2018-2019 bear market, we still have at least 50 to 60 days, another 2 to 3 months to go until we, essentially get out of this negative profit loss zone. And another thing backing this up is that when you look at the long-term holder and short-term holder cost basis, typically in bear markets, the short-term holder cost basis dips below the long-term holder. This is typically due to long-term holder capitulation. It's them selling at these highs and continuing to sell. But eventually when the short-term holders have a better cost basis than long-term holders, that is, bear market territory. And again, when you look at this statistic, it's showing you that the last bear market, 2014-15, lasted around 340 days. 2018, 2019, around 145. We have just entered the cross of the short-term holders having a better cost basis than the long-term holders. And we've only been in it for about 15 days. So this tells us we still have a long ways to go, basically anywhere from 4 months to an entire year. Now, I know I just spewed a lot of information at you guys. I know that was a lot to take in, but basically what I'm trying to summarize here is that even if the floor is in, which I believe we can continue to go a little bit lower in terms of Bitcoin's price, it does look like we are going to spend some time at these bottoms, whether it's 19,000, 20,000, or a little bit lower. It looks like the bear market floor has been set or is getting near to it. But even with these Bitcoin models, it shows us that we can spend a little bit more time. And that doesn't really take into account a lot of these economical issues, because those past bear markets did not go through any recessions. And that's a really big thing to consider, because a lot of people are saying that, in the next 12 months, we could see that recession play out and actually take full effect in terms of unemployment, a lot of people losing their jobs, a lot of companies losing their value, things like that. And we really haven't seen the max pain yet, in my opinion. And so in terms of Bitcoin's price, I think one thing that could happen is a false bear market rally. And I think that's something we have to be very cautious of, because it could show up as a bull market rally and a lot of people getting hyped up for it, but you don't want to get stuck in that bull trap. And so one thing that I really find interesting is imbalance zones. That's typically when you look at the market moves in a sort of a wave fashion, right? Up, down, up, down. And one thing that's very interesting is when the market moves very fast, I like to call them imbalance zones, because it's an imbalance in the market. There was too much sell pressure, and this is showing us that there was literally basically no buyers compared to the sellers. And typically what happens is that in the past, whenever you have these massive markdowns, eventually, either short-term or long-term, these imbalance zones do get filled, even if it is a crazy price swing. And typically what happens is, if we are in a bear market, there are false bull market rallies, typically, these fake patterns to induce retail to buy into it. And so typically what happens is you have this higher high, this, retest of the support zone, so showing you that this is a strong support, and then you get this higher high, breaking this previous one. And now people are seeing a market structure that looks bullish. And so what happens is you get more buying, more buying, more buying. Maybe you fill in this imbalance zone, which should again then fill it. This fills in that lack of liquidity by the buyers. And then what happens is, you could get that final move to the downside, or you can literally just continue to consolidate right here. People telling you that, hey, we've now made higher lows, and then people continue to buy. And then maybe we get that push down. But one thing I do want you guys to be aware of is bear market rallies, which is basically just false rallies. And it just leads you a little bit further down, but it's supposed to induce those short-term holders, have them buy into the market. And then that's when you could see that push down, more people being in a loss, because again, these institutions don't want to share their profits with retail. Their main thing is to get these retail investors out, have them take the losses, and then the institutional investors want to get the best price. So these will be really quick swings. I mean, when you're talking about bear markets, they're not going to give retail investors this much time to accumulate Bitcoin at these great prices. I mean, let's just look at the two massive swings below as to what happened in terms of Bitcoin's price. I mean, what we're basically at right now is right around here, right? People were accumulating. Everyone's like, the $6,000 floor is in, and then boom, massive wipeout, and then we skyrocket to the upside. And then typically what happens here is, people are accumulating. We get this false bull market rally. We get this massive push down, takes out these buyers, maybe these stop losses, people are margin called, and then immediately the market rallies to the upside. So these are interesting things to look at. Typically, whenever a floor is too obvious or it becomes very well known by everybody, that's typically when you could see some market manipulation, some mass capitulation, and then you could take out these lows, right? When you have lows like this, there are too many people who have buy orders right here, and the market wants to take them out, because not everyone can make money in investing. That's just typically not how it works. Investing is just the transfer of money from one person to another. So someone has to lose money. But that's a wrap to this video. I hope that you guys found some value in it. I hope you guys understood some of the charts that I was going through. I know it can be a little confusing sometimes. I mean, even sometimes I'm confused by a lot of what's going on, but it is important to remember that we are probably going to spend some more time in this bear market, much longer than you would actually like it to. And there is that possibility of us going even lower. And again, that important price zone of 15,500 is another really important thing to look at in terms of the whale's realized price, which could be a very strong support level if we break this one. So that's everything I have for this video. I hope you guys enjoyed it, and I can't wait to see you guys in the next one. Peace.